Hello and welcome to the Blueprint Roundtable webinar on defense and geopolitics. This is part of a webinar series being hosted by Business Standard, where a wide range of subjects in the news are being discussed, from the economy and finance to markets and even lifestyle. Today's edition focuses on the fortunes of India's private defense industry. It took the private sector around 25 years to account for roughly 25% of the country's annual defense production. The government now wants the sector to raise that share to 50% in the coming years. How can that target be achieved? What are the key hurdles? And how quickly can the sector get there? This will be the focus area for us, and I have two very relevant experts to answer these questions. We have with us Senthil Balasubramanian, Chief Executive Officer of Rossel, Texas. Our other guest, external panelist, Rajinder Singh Bhatia, will be joining us shortly. In the meantime, let me also introduce you to our internal panelist, my colleague, Satarupa Bhattacharya, a journalist with work experience in India, China, and Sri Lanka. She writes on defense and geopolitics. While we wait for Mr. Bhatia, I think we can proceed with some of our preliminary questions. We'll start with you, Mr. Subramanian. In your estimation, are we on the path to effectively more than doubling the private sector's share in defense output? Because that is a significant target, which the defense minister himself has set explicitly.
No, it's a good question. Again, good afternoon. Thank you for having me. And the topic is very relevant, because India is growing very fast, especially on the defense sector. Given the geopolitics, India becomes a major hub for growth. So we are, riding the wave per se. And when you look at the 50%, instead of looking at it as a target, it's a journey, right? It won't happen instantly or immediately, but there is a journey that we go through. And the journey happens not only with private sectors, but also the ecosystem that needs to support it. We can scale manufacturing very quickly, right? But then performance is key. In aerospace and defense, you can imagine you have to be at the highest level of quality, no compromise there, and on-time delivery and things like that. So it is definitely an achievable target, but it takes time for the ecosystem to support, because today a lot of our supply chain comes from outside of India. We do the value addition within India, but then how do we build up local supply chain capability so you're more agile? And there is also cost benefit, as you can imagine.
You've raised some interesting points, especially about quality, about integrating into international and global supply chains. We'll get back to that. We'll circle back to that. But it seems that you're bullish on being able to achieve the goal. So would you, and we'll take the same question to Satarupa also. In that case, would you hazard a timeline for achieving this target?
So again, like I mentioned earlier, instead of looking at a timeline and a target, right, it's more about sustainable increase in capacity. We've ramped up very rapidly at Rossel. I'm sure you know the background. We have doubled and tripled our volumes, and we'll continue to do so. Getting to these targets, a lot of times you can muscle your way through, but it's more about sustainable growth, right? How do you grow fast and then sustain it? Being in aerospace and defense, like I mentioned, quality is the number one pillar of our value system, and our customers demand it, right? 99.5 and above is where we need to be. That's where we are today. So we will reach those targets. We are seeing huge, market, not only just in India, right? Globally, Rossel does 80% export. Now we are also being focused in India. So when you look at our growth pattern, it's not only the export-oriented unit that we are in, but now we are looking at Indian growth also, because you see it globally, right? UK is growing, India is growing, pretty much every continent is increasing the defense spend. That's why we're bullish in saying we'll reach the target sooner than later, but the question is more about sustainable growth, right? You can grow, but can you sustain your quality? Can you sustain your on-time delivery to your suppliers and customers?
Point well taken. I also believe our second external guest is now, I think, ready to join us.
In any case, I have joined in.
Welcome to the Roundtable webinar. Just give us 1 second. We'll fix your background.
I know. Thank you. Thank
So
you.
in the meantime, I'll introduce you to our audience and to our fellow panelists. We are now joined by Rajinder Singh Bhatia. He is the chairman of Kalyani Strategic Systems Limited, the defense business subsidiary of Bharat Forge Limited at the Kalyani Group. He is also the past president of the Society of Indian Defense Manufacturers. Welcome, Mr. Bhatia. We had just started with the very first question, the preliminary question, and I was just about to move to Satarupa, but since you've just joined us, I'll let you have a crack at it. As we were talking, we've now almost, the private industry now almost roughly accounts for 25% of the national defense output. And the defense minister has set a very explicit target of achieving 50% in the coming years. Do you think that this is an achievable target in terms of the medium? Eventually, we will get there. But in the medium term, is this an achievable target? And if so, why are you bullish about that?
Thank you, Bhaswar, and thank you. I can see also Satarupa there. Hello, hi, how are you? And my best regards to Senthil. I did hear the last part of your conversation. Unfortunately,
Yes.
I can't see myself, but I hope my picture is there, which is fine with me, Bhaswar. So your question is always loaded with something more than what you have asked. The question which is there, and let me try and amplify that. Reaching from 25 to 50%, it's a zero-sum game. So I have to take somebody else's share. But if you ask me that, are we going to double ourselves in a short period of time? My answer would be yes. Whatever is the production, if you take a look in 2018-19, we were around 17,000, 18,000 as private industry. The figure has doubled in about 4 years' time. If you tell me, are you going to double again in next 4 or 5 years? I'll say yes, most certainly. But if you tell me I'll become 50% of total, then I have also to see how well the PSUs progress over the next 4 to 5 years, because their share also moves. And one thing which is very interesting is that whenever you bring competition, you bring the best out of the people. Take a look at what happened at exports. For the first 3 years, private industry was almost 70 to 75% of the exports. But this year, PSUs have scored better than us in terms of exports. So I would say that there's a very strong chance that we'll double ourselves. Whether we'll become 50% of the total and in a period of time, maybe a little bit of crystal ball gazing. But all the same, how well they progress, how well we progress, I think figures are less important. More important is that are we going to reach the goal of Atmanirbhar Bharat in a reasonable time frame where there's many critical technologies which we have still not mastered. So I'll rest my case saying that, we'll double ourselves in next 3 to 4 years. Now, whether we'll become 50% of the total revenue may be depending upon how well the others progress.
So you raise a fair point, because obviously having a share of the industry also depends on how the other components and constituents of the industry will grow. And you're right that the growth that we've seen, both in overall output and the share of the industry, is quite encouraging at the moment. So now we'll circle back to Satarupa. Mr. Balasubramanian had raised a very important point, and some of it was echoed in Mr. Bhatia's answer too. One is of quality and the other is of critical technologies. Because obviously you can grow in volume. You can grow in volume simply because our own demand and export success will keep increasing just the sheer output of what we are making. But as an external observer, where would you peg us in terms of the critical technologies that we've mastered or are close to mastering and the quality of the products that we've been able to now build in the recent years?
Okay. One issue is of scale, which I'm sure you'll delve into further as we progress. The other issue is of products and the sophistication that is needed in today's world, where warfare has changed, the nature of threats has changed, and we talk about the private contribution to the country's defense manufacturing, and as of now, if we look at 25%, and maybe in the next decade we can do 30 to 35% or even 50%. although Mr. Bhatia talks about or mentioned, he dropped in the term crystal ball gazing, because obviously he knows better about how these things can be achieved. But as a journalist, from what I understand about seeing the examples of sophisticated technology used in other parts of the world, especially in advanced countries with advanced militaries, I think we need to emphasize research in the private sector. That is something I believe, as a country and the defense sector in particular needs to address. The one thing is that we have a large number of STEM graduates in this country, perhaps, just behind China in terms of numbers. But coding in itself is not everything. We need, for example, precision engineering and many other things. So when you talk of critical technology, as you know from your own reporting, for example, with aero engines, we are still struggling. On the submarine front, we still have things to do. So when we talk of this value added products, of course, we are manufacturing. India is manufacturing sophisticated advanced weapon systems and platforms and radars and sonars and connections and even the electronic warfare suites, etc. But the point is that I think still with the research, we are still on the lower side for a country of India's size and ambition. The private sector has to, I believe, up the investment it needs to put into defense research, and waiting always for government's help might not work. The other thing is we need to develop a culture of tolerating failures and not just signing off immediately saying that, okay, we've invested this much money for X number of years and therefore we can't go ahead with it. Let's just import or, get something else. Parallelly, I think failures will have to be allowed, and some amount of money will be so-called wasted in the process, but it won't be a waste because some model will come out of it. The other question is the uniqueness. So we need to produce, I believe, as a country, unique products and systems for ourselves that we can leverage during war or to deal with threat perceptions solely on the basis of deterrence. And perhaps the industry can sell it abroad as well. There have been conversations about drones, etc. Are we looking at models where we just develop mass-produced drones that, say, Ukraine has already developed or some other countries have? And should we not have our own unique drones or some other, modern warfare tool? You might say that by that argument, we should not be making guns or aircraft because other people have made it. But welding metal is not the same as developing frontier technology, because we can become obsolete, and the most thing we do is chase after other countries and only try to catch up. So I think there has to be a fundamental shift in the way we are looking at this. And obviously, private industry is in a very good position today to demand that change and also work from within. So I would say that research is crucial. Innovation is important. The investment on research is important, and overall a change of approach, not just trying to scale up, but how the scaling up is happening. So looking at these focus areas, and technology is an essential instrument of war fighting today. So if you own it, if you own the software codes, everything from design layouts up to the last, whatever the last mile is, if you own the entire range or at least the critical elements of that range, you are in control of the battlefield.
That's an interesting point that you raise. And I think we have the two external panelists we have with us. They've been on this trend. I think so with Mr. Bhatia, with Kalyani, of course, there turbofan engines. And with Russell, Texas, of course, there is the long history of supplying very critical aviation parts to the largest aerospace companies in the world. So, taking forward what Satarupa said and adding that to what Mr. Balasubramanian and Mr. Bhatia have said, I think the very first part of our webinar the very first question has been answered very quickly, which is that can we scale up? Absolutely. Now, of course, 50%, a specific figure, again, as pointed out, that's a function of how all the other constituents of the industry will also move. But there doesn't seem to be a doubt amongst any of our three expert panelists that the scale up will occur. So basically, what we are now dealing with is how is that scale up going to occur, in what direction, and what will be the outcome of it in terms of having sovereign control on real technology. And I think we can take forward from what Satarupa said, and I'll pitch this question first to Mr. Balasubramanian. Your company, and we'll draw on the experience of your individual companies, because I think that will help the audience and industry members who are listening in to understand really what we're trying to get across. Your company has quite a unique story. It didn't start out in defense. If I'm not incorrect, at one point you were in the tea business,
Correct.
right? And from there, you've come into defense. And in the past years, you've actually won awards from the likes of Boeing and Lockheed in providing very precision aerospace parts. So, what is it that you said? What is it that you would say that the broader industry can look at in your case and learn and employ to ensure that the scale up occurs and occurs at speed?
Sure. No, very good question. To your point, Rosell started as a tea company, and it was started by Mr. Harsh Mohan Gupta and our managing director, Rishabh. He had this vision to have, how do we become a subset and create an aerospace and defense company. So this company was started 14 years ago. This is our 15th year anniversary, like what you're saying. So it's 15 years in the journey, and we started with a single program at Boeing. And then today, if you look at Rosell's, platform, we are in every single defense platform for Boeing. And then we've hence also expanded to others like Lockheed, Honeywell. We've also diversified into space and also semicon industries. And, the vision is important for a company, relentless pursuit of quality. I keep coming back to quality because, that's something that every defense company looks at. And today, when new programs come in, we actually sit down. Ms. Bhattacharya mentioned about technology and engineering capabilities. India initially was just looked at as a manufacturing powerhouse, right? We have a lot of employees available. Labor is comparatively, inexpensive. When I say it is cheaper than India, when it is cheaper than US or Europe. So initially, India was looked at just as a powerhouse for manufacturing. Today, India has matured and grown into a place where it's also looked at as a technology house. Specific to Rosell, when new programs get launched, we sit across the table with Boeing and design solutions. And so there are two things, right? One is build to spec, the other one is build to print. So initially we started as a build to print, where customer gives you the drawing, but now we're also doing build to spec. So we have huge engineering presence. For new companies, that is very, very important in my mind. It is not just scaling in manufacturing, but there are multiple sectors, right? You have to scale up with your engineering capability. I think Ms. Bhattacharya mentioned on that. And also, how do you look at your supply chain resilience? With geopolitics, if you don't have a strong ecosystem and if you don't have a resilient supply chain, you will get all the business that you can think of, but you cannot execute. Earlier I mentioned scaling is easy, but sustainable growth is very, very important. And that's where we think, investing in supply chain, investing in engineering, investing in strategic sourcing, these all become pillars for companies to grow and sustain in the eyes of Boeing's or Lockheed or any of the space companies that we deal with, or even the semicon companies.
That's another point that we'll add into the list of things that we are now putting down in terms of how does the industry scale up. We're talking of investment and capacity, of scaling up, and of vision. And that brings us to Mr. Bhatia, because when we talk of vision, Kalyani, of course, has now entered into the micro engine business, which is it's something that is relatively new in our defense ecosystem. And of course, as I said, there's the past precedent of the advanced towed artillery gun system, which was also something pioneering in its time. So let's get to the brass tacks, though. While we have companies like Kani, Rossel, Texas, and there are other names, which it would be too lengthy to list all of them. It is also known that the depth of R&D in our defense industrial ecosystem and even in our broader industrial ecosystem is still not, it's not enough to meet our needs. So obviously investment, one, it's a function of where you'll get the money from, and we'll get to that. We'll address that issue later. But it's also a function of the policies, especially from the government side, which incentivize this. So Mr. Bhatia, now that we know that scaling up is very much possible, we know, speaking to all of you, what is required for it. What are the enabling policies that we need, or which are already perhaps there, but need to be perhaps doubled down upon to make sure that this scaling up happens smoothly?
Bhaswar, thank you so much. I think this is a very important question. Firstly, I would like to bring forward what is the magnitude of scaling up which we require. I think sometimes we miss that particular figure when we are talking about it. We have been growing at about 9 to 10% in budgetary allocation for the last 23 years, which means every 7 years you are doubling yourself comfortably. If you see, the production has actually been going much more than 9%. We have last year probably 20 odd percent, before that 10%, and various figures if you take a look. So you have been growing at certainly more than the budgetary allocation because exports came in and some indirect manufacturing takes place. So your growth in manufacturing has been almost about between 10 to 15%. If you take a 10% figure, by 2047, it will be a multiple of 10 times of what we are doing today. Now you have to realize that particular magnitude, that from 75, $80 billion, you are looking at close to $1 trillion or $800 billion. You will no longer be 3% of the global budget. You will probably be close to 15 to 16% of the global manufacturing defense industry or overall. Now, if you take a look at this magnitude, there are 2-3 things which come in the way. First one would be, of course, the technology, because without technology, you will become a labor workforce. You will be working on labor arbitrage, which is not going to bring you much returns going forward. And India is in any case no longer the fit country for labor arbitrage. There are countries which are much cheaper than India all around us. You have Philippines, Bangladesh, or Vietnam. They all, production costs are much lower. So the key point is technology. And for technology development, there are a number of factors which are required. Technology is developed in 3 domains. One would be always government oriented. If you tomorrow want to make a jet engine, no company or no startup is going to make it. It will have to be a national effort. It will have to be effort national funded. If you want to make a nuclear submarine, you cannot be expecting a startup to make it, or even a private sector company to indulge in itself. Our volumes are still not reached that level of Northrop Grumman or somebody who can do it. So it will have to be a government funded project. The second part of the technology would be the medium-sized technology where you are already at TR2, 3 level, and you are now taking it to 6, 7 level, which will probably then industrialize it and take it to that level. The third part, and which is the critical part, is going to be the breakthrough and the transformative technologies, which can actually make you jump the queue and bring you much forward. Now, that is where the thrust of the nation has to come. And that's where it will come is in what we call startups, in small enterprises, and some enterprises, not always small, even mid-sized, larger, if they have the appetite to go out and go for some of these technology products. Now, that's where I think some policy initiatives can help. There are 3-4 things which I'd like to highlight. Globally, it is known that startups who are at the forefront of so-called the breakthrough or disruptive technologies only have a success rate which is slightly less than 18%. 82% of them are going to fail. They are not going to cross value of that. If you have an accelerator, if you have a industry anchor, if you are able to fund them at the right time, this figure can probably become to 30 to 40%. Do we have a mechanism to see them through this? Right now, we do not have any such thing. Because remember, these startups will not have anything to mortgage. They do not have assets to mortgage to bank to get a loan. Because all there is a technology, and technology really cannot, or development cannot really get you loans today or get the capital to move to the next stage. So we need to find a mechanism of having what they call the startup accelerators. We need AIF funding. We need SIDBI and other banks in the country to come out with alternate investment funds which can fund these startups to take them through the valley of death. This is point number one. The second essential part is, since 80% of them are going to fail and at least 40-50% of the projects will be government funded, what is our way of handling the failures? If you are going to give him money against a BG, and if he fails, encash the BG, then you are not going to be encouraging more and more people to come into this domain. After all, what is technology development? Technology development is not incremental in nature. It's not a game where you will do incremental budgeting that I was doing this, I was going 10 meters, now I'll go 11 meters. It is not that. It has to be a totally de novo idea, and hence the risk associated with it. So we need to find the second part. Third part in the country is that we have made some very fine statements, announcements. We made a deep tech fund of 1 lakh crores 2 years ago. We need to operationalize these funds. This fund has never been operationalized. It cannot be just a way to cut down the fiscal deficit. It has to be actually done so that you can have real technology development come into the country. And my fourth point is, how do you reward, how do you incentivize R&D, I think is the most critical. Today, we have forgotten about that method of giving 100% credit or 200% credit on R&D spend. It is now not all that benefits have been withdrawn. It is a fairly good idea to encourage R&D in the country by letting people have at least, if you spend 100 crores on R&D, please give a benefit of 200 crores on taxation. Nothing is going from anybody's pocket. It is just that the taxes are going little low, and that is all what is the incentivization which is required. And the last point, which is very surprising, in India, we don't even qualify expenditure which is towards a product development as R&D. If I have a sale at the end of the product development, I cannot put them into R&D bucket. R&D is not meant only for putting a patent into place. After all, it should have a fairly good commercial end to it. And right now, we do not even recognize that. So I think some of these parameters will help in giving it a little boost. I still believe at the national level, our figure of 0.6, 0.7% of GDP is rather low. We need to at least bring it to 1.5%. And in defense, it needs to double from where it is 11, 12% to maybe 20% going forward into the future.
So before I make any observations, I'm getting the suspicion that all the three panelists have had a conversation beforehand, it seems, because there is a alarming amount of agreement with Satarupa highlighting that, risks have to be taken and that failure must be accepted, with Mr. Bhatia taking that forward and saying that there has to be a mechanism to carry startups through the valley of death, which is a very real phenomenon, with Mr. Balasubramanian talking about how companies will definitely have to scale up and move up beyond labor arbitrage, which is another point that Mr. Bhatia again has reinforced. So I'm getting the distinct impression that maybe all three of you have had a conversation before you've come to me. But nonetheless, we'll move on. So I think what we are now seeing, we're moving into the actual, the meat of the argument, which is how do you do it? Because I think we have established that we can do it. We know what we need to do it. And now we are at the how part. And for that, I'll come to both Satarupa and Mr. Balasubramanian. I'll start with Mr. Subramanian. You've had a lot of international exposure too, from if I'm not incorrect, and you've seen how other countries have dealt with incentivizing R&D in perhaps niche areas, especially in aerospace, if nothing else. Is there some template there, apart from what Mr. Bhatia has highlighted, because there are certain plans in motion even in our country which do need to be operationalized? But is there something that we're missing? Are there things that you have perhaps observed in other countries that could be useful in our template?
No, good question. Touching back to what Mr. Bhatia said, uh, India has to spend more time and effort and money making it a technology house. That puts us at a different level in the value stream. To your point, I worked in 6 different countries. I worked in the US, I worked in the Philippines, I worked in Puerto Rico, Mexico, and China. Different countries have different subsidiaries, tax benefits, but in India, I think there's benefits are available maybe on paper, but it has to be a lot more effective when it comes to execution. That would help a lot of the MSMEs to grow faster. The aspiration is there in India, the ambition is there to grow, but the financial piece where I see lots of struggles with MSMEs. If you look at other countries, where it is the Philippines or other parts of the world where they're aggressively growing in aerospace and defense, the government helps not only with technology but also with training. I'll use even NADCAP as an example. NADCAP certification requires a lot of investment for a small company. And if the government can incentivize some of that and enable, whether it was through subsidiaries, through loans, that also helps companies, right? So technology can be in different forms. And when you also talk about scalability, I mentioned in other countries there is also a lot of training incentives. Right, in India, we are able to hire people, but then do you immediately put them on the job? Say at Rosell, we go through 3 months of learning before an employee actually touches a real product, and it's a huge investment, right? Because we want employees to be fully trained and certified and qualified, classroom training, hands-on training, buddy system, and it pays off when we see the quality of the product. If you look at any of our major OEMs, our quality is at 99.5. It's green. We take a lot of pride in it, but it comes with a cost. Imagine hiring employees, hundreds of them, and training them for 3 months. So other countries, to answer your question, give a lot of incentives on training, right? If you are truly training employees and they're actually not producing a product, how do you take the cost and get benefits from the government? So these kind of things will help, whether it is on certification, whether it is on like NADCAP, investments, training of employees. Mr. Bhatia mentioned about tax incentives for technology. Many companies, are getting into new technology, but funding is always a challenge. So if India were to reach these ambitions, definitely some acceleration in these incentives would help, and also execution of these, right? It's like I said, it's on paper. How do you execute these and companies really see the benefit? Then I think India would be in a much better position.
So we'll take this point now forward to Satarupa. One gets a distinct impression that a few years earlier, the general complaint, or if not the complaint, the apprehension that the private industry used to have would be about orders. That will we get orders? That most of these orders will go to public sector enterprises, and we're just not there in contention. That seems to have been fixed to a large extent. It seems, speaking to both Mr. Balasubramanian and Mr. Bhatia, whatever concerns may remain on that front, their major concern seems to be about incentives and funding. And funding raises an interesting point because both, as a reporter, you've obviously seen how defense industries in other countries are working. And there is this curious trend, which is present in the Western countries, especially in Europe and the US, where a lot of private equity has suddenly come in and started funding defense companies. All these, in fact, many of them are startups which have scaled to massive size now, to the point where they're challenging the likes of Lockheed. So do you think that perhaps something of that sort might be useful in the Indian context, Satarupa?
Are you asking if, there should be a system within the industry to
Yeah,
fund
because
this
can
kind
the
of
industry
research?
also raise its own resources? Because you had pointed out something very
Yes.
good in your initial answer, which was that you can't always wait for government support. So government support would be welcome, it's necessary, but in the meantime, perhaps we can also do something from our end.
Yeah. So to that point, so to your question, and basically the fact that over-reliance on the government can hurt the industry. It can also delay innovation because India's reality is slightly different compared to China. Our national conditions are different, governments are different, even weather condition is different. And there are things which might take a little bit of time for us to do. While I understand the larger point of government incentivizing research or helping the industry develop in a way that is a little more systematic, perhaps more a different kind of regulation or regulatory mechanisms are needed, because we have a lot of, if you count the hundreds and perhaps the thousands of startups that have come in, it's not to say that if you have made, say, shoes in the past, that today you cannot make rockets. But I think there is an implosion of a number of players in this sector, and I've heard this even from military officials, that not everyone knows what they are doing. So firstly, it's important to identify those batches of people or startup who know what they're doing. If they're going to do components, they should be in that band. If they're going to do something else, they shouldn't be in that band. It's not a free for all situation because it's a very focused area. And finally, expertise and experience will count. Again, it's not to say that because you've made shoes, you cannot make rockets. But then, you have to demonstrate the ability to do that, and fairly quickly. That's point A. Point two, before I come back to your a question on self-financing, maybe to an extent from within industry, I would say that we also need to develop a stronger culture of filing patents. And I believe a lot of people don't know how to do it. So a lot of the innovation that just goes on in the background, maybe in labs, in some unknown place, is not brought to the mainstream because they don't know the channels through which to go. So I think more systematic a systematic placement of things is needed. So we need to figure out again who's doing what. It shouldn't be too chaotic. Third, I feel venture capitals, venture capital needs to come into this sector. I know a lot of VCs have spoken about investment, but if you look at the data, it doesn't really show that they have put in that kind of money over the past 10, 12 years to develop products. So I would suggest that, for example, it's not my place to suggest, I'm a journalist, but what I'm saying is that I would say that, for example, you have these industrial parks. You also have defense corridors that have been developed. Why not attach small pockets of capital from within industry to these and develop a model whereby you finance to a certain extent and then the government pitches in and the big companies do that. And if legacy PSUs, for example, also want to give some to this effort, they could. But if you're going to say you have an X amount for the DRDO, which is basically the main research center for defense in India, coming up everywhere, or you don't have enough small research hubs within the defense private sector, then I think that effort, which needs to happen all together and fairly quickly, you have to meet those milestones, might be needs to think about this a little more and consider India's conditions and how this can be done. Bhaswar?
So that's the point that I wanted to tease out from you. So, Mr. Bhatia, I'll bring this to you and then we'll go to Mr. Balasubramanian. So, when you look at the data, especially because you pointed out how a lot of the cutting edge breakthrough research will also have to happen at the startup level. Now, when you look at VC data, if you look at the overall numbers, they're growing. Yes, even for defense startups. But when you look at it with some detail, you realize that they always prefer dual use technology. So the moment it's something which is very risky, or it's the sort of breakthrough technology that Satarupa and you were pointing at, that's something that perhaps hasn't been done anywhere else, it doesn't seem to attract that sort of confidence. Now, you've already given some of your prescriptions on the policy level that what can be done. But is there also a need for a mindset change, which is not just a point of policy, but a point of culture?
So let me take this point in a little slightly different manner. A VC or a PE is not going to come because we are wishing them to come. They have a very good system of due diligence. They will come in when they believe, and all of them are at a certain time that this is the time period I'll get invested and I'll exit myself at a particular time. Now, issue which comes up with this in India is, and there are 2, 3 issues to it. One is that the valuations and expectations of the valuations have made almost every startup, every small company in the country actually not a target for investment. People are trading at price to earning ratio of 100 to 160. Where is the question that anybody can bring in money and also expect returns at some time? Each and every, you take any startup in the country and take a look at the valuations. In fact, we as large groups are finding it difficult to even support these people, because even when you want to pick up a strategic stake, it is becoming next to impossible. I'll just give you an example. I am on the board of one of the companies, I will not name it. Their total revenue is 90 to 100 crores. Their profits are about 16 crores, and they are now raising capital at 350 crores valuation, which is fairly good. It is 3.5 times of the revenue. Same group whom I was talking to picked up a company in UK with 120 crores of revenue, 20 crores of profit at just 100 crores, 1/3 the Indian price. So firstly, they have made they price themselves out of the market. So P and VCs will, once they find value, they will all come in. You don't have to, prompt anybody to come in. Why do they find value in some of the other areas which are related to India's consumption theory? Because you get 1 million people, then hence you believe you have got 1 million customers for you going forward, and people are ready to bring their capital. But the issue which is there with the defense is, one is this, why PE and VCs have not gone, because everybody has priced himself out of the market. The second part which is there is that nobody in the medium and large enterprises, we are not looking for government capital. If that is the understanding you have got, I think it is wrong. What we are saying is that ensure that the money which we are supposed to get is given to us in a reasonable time, given it to us in a manner which is faster. You should be using RTGS, you should not be using CDA. We have other issues which are there. The third part is, and my friend from the industry will totally appreciate, how fast you can move your inventory is the key point of your turnover revenue or your capital investment. If my acquisition cycle is going to be 10 years or 7 to 10 years, how do you propose I am going to be taking it up and, trying to recirculate my machinery, plant, things? I can set up a factory. I don't even know when the order will materialize. Those are the areas where we need to concentrate. Those are the issues. If you are able to give me a confirmed thing that, okay, well, we have gone in there, this is the product you are making, we'll buy these many guns in the next 4 years, there's no problem. We'll do our own investment. Most of the Indian companies are debt-free today, thanks to the no investments over the last few years. So everybody started paying off their debt rather than trying to invest more. Of course, the investment cycle hopefully will return. So my point
That's
is,
the point well taken.
looking at any grant.
Yeah. So one, that you're not looking for any grants or
You
handouts.
are fully aware. You are sitting in a financial newspaper with great reputation. You know
It is our
So
job to
everybody
still
is
tease
cutting
out
down their debt
answers
for long.
from the industry representatives so that we can explain it to the audience that what's happening, because there are misconceptions and misapprehensions even among the audience members. So this helps them understand that what the industry is actually looking for is not the sort of support that they might be thinking. It's often just execution of things that are already there on paper, commitments that have already been made, or
That's right.
procedures that already exist. And this
Yeah.
brings us.
So that is what we are looking at. Yeah. All to you. Over to you.
Understood, Mr. Bhatia. So we'll bring this over to Mr. Balasubramanian. Although, Mr. Subramanian, it seems your video has been switched off. Is everything, are we good to proceed?
Yes, go ahead. I think my audio is fine. My
Yeah, so
video.
I think if there's any technical issue, I'm sure we can sort it while we continue the discussion. So I think what we've now gathered, so we had three parts of this webinar. One was that, well, there is an ambitious target. Can we meet it? And I think the consensus so far is that we mostly can scale up to something around that or perhaps more. And just we're not talking about the exact percentage share, but we know that we're going to scale up quite significantly. The second question, of course, was that what is required for this? The components, technology, scaling up your investment, more R&D, quality. All of the panelists with us have, I think, barring some differences in view, are unanimous in their opinion of what is needed. And we are still at the policy level, the execution level. We've seen what happens with startups. We've seen what we need to do from the large scale government incentive side or policy side. One of the questions that still stays with us, and which Mr. Bhatia also touched upon, the orders have started coming. The issue of nomination, which was that public sector companies would get orders on a nomination basis, some of that has stopped. There is a clear trend moving away from it. But the issue that he highlighted, and I'm sure Satarupa would also agree, the certainty of orders, the timeline of acquisitions, despite our best efforts, it doesn't, the needle on that doesn't seem to be moving fast enough. Would you agree? And do you think that's one of the roadblocks that still remains?
No, it is certainly something small industries would struggle. It's the chicken and the egg, right? Do you invest and wait for the orders, or do you get the order and invest? And I'll touch a little bit on Mr. Bhatia's point. Companies, when they get their orders, how do you scale up? Money is required. Can the banks help them, or is it self-funded? That depends on. There is no one single answer for that. Also, if you look at inventory, right? Many companies get a lot of inventory. Working capital is tied up, and that can also be it can be an anchor, right, from a company to grow. I'll use Rosel's example. We've been traditionally carrying 10 and a half months of inventory, right? But that was hindering our ability to scale up and grow and diversify. So in the last 12, 24 months, what we've done is we've aggressively reduced our inventory. Right now, we're sitting at 7.5 months. From 10.5 months, we've reduced inventory to 7.5 months. Earlier, Mr. Singh mentioned that is a key element for companies, right? When you want to grow, you just can't depend on policies. I think Ms. Bhattacharya said that. You should have the ability to free up working capital, right? So if you look at those, we talked about people, we talked about technology, we talked about capital. So companies also have to get aggressive internally, freeing up working capital, whether it's through inventory turns, whether it's self-funding. Because if you depend on other factors, then it hinders your growth, and we will never achieve any of these targets. If you look at Rosell, year over year, we've been growing 50 to 60%. Last year to this year, we went up 78%. So just imagine the scale at which the company is growing. And unless you have good inventory turns, unless you have good capability to self-fund and not depend on policies, not depend on banks, because also banks in India, they're willing to help, but the response time is much slower compared to other countries that I've seen, right? So those are the things that come to my mind to answer your question.
So I think we're coming towards the close of our webinar. I have two questions with me, which have come from audience members that I know of. And I think I'll quickly pitch them because they're interesting, and I'm sure people present on this panel will want to answer these ones. So one of the questions, which is also very similar to one that I had wanted to ask, but since an external audience member is asking it, it's better if that question takes the place of mine. The stealth jet that we are developing, it's one of the primary examples of how the private sector has gained the confidence of the policymakers of this country. We've had very senior MOD officials tell us that this is a leap of faith that we've taken, that we want the private sector to productionize a second combat aircraft production line in the country. So that is a big initiative. I know that right now we don't know who the winner of that program is, and I'm also aware that one of our panelists, their company is an active participant one of the three contenders. So they're not asking who's going to win. They just want to know that in terms of what the private sector has done before and what the stealth jet, the AMCA, the arm car will represent, what is the difference? What sort of a jump in complexity are we talking about? And what does that mean for the private sector?
So obviously, I think you are looking at me to answer this question, Bhaswar.
The audience member is looking at you to answer this question. It seems they know that Bharat Forge and Kalyani are involved.
So, firstly, it's a leap of faith. There is no doubt. Let's not forget. I think if you go back to 70 years, or now we are going to be celebrating 80 years, just on 15th of August this year, 80th Independence Day, 79 years gone. I think there are some landmark decisions which have been taken during this period. One of them, of course, was the putting up of negative list or the positive indigenization list which came up, which said that following items will not be imported and will be done in the country. The second was corporatization of the ordnance factory, which people thought is just not possible. You coming from that part of the world, you know how difficult it was, but it was implemented. And if you ask me the third leap of faith, and each one of them have paid rich dividends, the third was, of course, this question about MCA going to private industry vis-a-vis to a public sector entity. Now, how will it play up? What will be the players which will do? Is all a matter of conjecture or looking into the future. But the fact of the matter is that private industry is ready to come forward. We are ready to put our best foot forward and ready to take on a challenging project like this going forward into the future. We have either gone singly or we have gone with consortia. Most of the people have gone in a consortium. L&T is with Bharat Electronics. We are with the BML and Data Pattern. So we are hopeful that this will be the start of that journey. Now, this project is not easy. You can understand the biggest problem probably lies in the power part of this. Where are we going to get the jet engines? You recently heard that price of 414 has just about been increased by 300% to what it was. So there are a lot of things which are there, and this AMCA project is based on G engines. I hope you know that. So, of course, there are many unknowns, but in terms of private sector's commitment to this project, I think we are very much ready to take that step forward. Every time I have gone to the ministry in the last few months, we have been asked this question: are you people serious about this? Our answer to that and answer to you is we are extremely serious. We are ready to put all our best efforts to take it forward, but only time will tell how this will shape up into the future.
No, but I think no one will be able to accuse the private industry anymore of lacking ambition, because all the players, they threw their hat into the ring. Because I personally covered the entire process, and I know that it's not complete yet. We don't know yet who is actually going to build the prototype of the jet. But as you pointed out, whoever is the winner is going to be a private sector player. Even if it's one of the consortia, it's going to be led by a private sector player. And that is no small feat indeed. The other question that I have with me, and while I think both Mr. Bhatia or Balasubramanian could answer this, I think I'll pitch this one to Mr. Balasubramanian because it's a very technical question. So let's see how you'd want to answer this. So the question, and I'm trying to understand what they're trying to ask here. They're both anonymous users, audience members. One would request that they let their names be known. It's easier, then they know who's being addressed.
Yeah.
The question here is, if I get the correct sense, that if we are able to manufacture complex aerospace components for the likes of Boeing and for the likes of Lockheed and for the likes of Airbus, I think for Airbus and commercial airliners, it would actually, Kalyani Bharat Forge would also be a fit candidate there because they also do the same. That if we are already able to do that in the country, and I think they're taking forward from what you said, that if we can build to spec some of these systems, what's stopping us from doing that at a larger scale and developing an entire platform of our own?
No, it's an interesting question. when you look at commercial aerospace, obviously the two big players are either A or B. It's either Airbus or Boeing, right? They are the biggest manufacturers in the world. For example, I'll use Rosell as an example to answer the question. We've been in the defense industry for the last 14 years, going on 15 years, and now we are maturing into get into commercial aerospace. Commercial aerospace, it comes in big waves, right? If you look at the military program, they may make 5 Apache helicopters a month. But if you look at commercial airplanes, they'll make 50 a month, right? So when you talk about scalability, it's in a different ball game, right? All of a sudden, you're not playing college cricket, you're like in the IPL, right? So it is in a different ball game. And not many companies will be able to jump from providing services for 5 aircrafts a month to 50 a month, right? I mean, you're talking about, massive growth. So it's not about technology. India is fully capable of designing and manufacturing all these components at any level. And there are many companies like, Bhatt Kalyani, they are, extremely capable of all these technical, capability. One, it is how soon can you jump up to get into commercial? And two, is there a demand? China's right now trying to make their own airplanes, commercial airplanes. But the question remains, would the rest of the world actually buy commercial airplanes from China? Right? It may take a lot of time for that. Today, everybody still depends on commercial. When all of us fly, it's either an Airbus or a Boeing, right? So there is a level of trust that is built among the consumers. And so it is not just about scalability, is there also the demand side of it, right? Let's say a company comes and makes a plane with all the consortium of all the different companies in India. I'm sure we can build airplanes, we can build any military asset in India, I have no doubt. But then, is there a market that will buy our product, right? It's a completely different way to look at it.
So I think we've answered all our questions, in fact, and we've got some very clear answers. I'll just sum it up for the audience. And if I go incorrect somewhere, I'm sure our panelists can correct us. The sense that I get is that we are poised for a scale up. The only deciding factor here really is that one, the policies that already exist on paper to promote the industry's participation, whether they're executed as they were intended to be executed. Two, as our panelists have pointed out, that are we willing to take the risk? Do we have the risk appetite? Are we willing to accept the failures that will come along the way till we reach success? And three, I think most important, the sense that I got, which our panelists didn't frame it in those terms, so I'm not trying to put words in their mouth, but the sense that I got was that it's really about changing your mindset. It's about that it's not that you don't have the building blocks already, it's how you're using those building blocks. And that if you can get everything to work the way it was intended to, you'd probably reach most of the way to your goal anyway. I hope I've gotten most of the summation correct. Does anyone have any objections?
None. You can go
Satarupa?
ahead. I am okay with it. Okay with it.
So thank you for your time. Mr. Bhatia, thank you for your time. Mr. Balasubramanian, thank you for your time. Satarupa, and we'll meet again perhaps next time for the next roundtable with new guests and new ideas and new topics. Thank you and have a good day.
Thank you, Bhaswar.
Thank you.